Hey everyone, it's Rick, former investment banker, buy-side analyst and prop trader with 25 years in the game. Today I'm combining positioning, sentiment, and technicals to hunt for asymmetric trade setups. Welcome to Offsides Macro. As the weeks go by, I find myself leaning more and more on GPT, not only to optimize my system, but to scan basically the entire web and podcast and Substack for sentiment and consensus shifts. The one thing that keeps popping up, GPT's telling me that nearly 25% of all of the macro content that's out there is still obsessing over the Fed. But here's the thing, rates aren't set by Jay Powell and the Fed. They're set by market participants like us reacting to inflation and growth and supply and demand for capital. Just remember that the Fed follows more than it leads.
And we move $10 trillion a day of money. And we're probably a tenth. So the money moving around the world is $100 trillion a day. The money moving around in the investments, this is stocks, bonds, corporate governments, derivatives, credit, you name it, FX, sovereign debt around the world, 30 trillion. The people who set those long-term rates are those people, including you in the room. It's not the Federal Reserve.
You'll hear me use the term offsides quite a bit. I've written on this extensively, but consider it in the context of a sports analogy. Being offsides is not a place you want to be. Lastly, for the best experience, I highly recommend you open the deck listed in the show notes. The charts and tables that I reference will help you fully connect the dots. I'd like to start off discussing this building narrative on short US dollars and what I'm seeing in positioning, but let's briefly get into the report card section where we discuss the previous highlighted markets and how they fared over the course of the past week. And as a reminder, these highlighted markets are not trade Sunday night ideas. They're meant to be, I think, your most useful tool for your dashboard for the upcoming week. And these are the markets that you should be more dialed into so that you can let your unique process give you a go signal that aligns with the positioning. Last reminder, I always speak in terms of multiples of daily vol instead of percent changes, since vol adjusted speak I think is more relevant as long as you're sizing properly. So for example, if the average daily vol of fives is 50 basis points and they're down 1, that equals down 2x. If the daily vol of natural gas is 4% and they're up 8% in the week, that equals plus 2x. So let's tackle the long setups first. I specifically spoke about the NASDAQ being the most offside short, and the equities performed very well once again, but the Russell was the winner on the week. I also spoke about crude being in the offside short positioning as well as coffee, and both of those had pretty good weeks as well. Don't forget that positioning got us long from early April around 5,400 in the S&Ps to now above 6,000. Now let's tackle the short side. There really were no specific setups that I highlighted, but I did mention this looming, at least from my perspective, long setup in the US dollar. I also adjusted my developed market percentile that's typically in the zeros and ones to be weighted identically to the Dixie index, and I think that gives us a more accurate picture there instead of just using a straight average. Obviously, it's heavily weighted towards the euro at 58%, and the Japanese yen, British pound, and Canadian dollar ranging anywhere from 9 to 14%. The short US dollar narrative, as everybody probably knows, just continues to build. And it's getting close enough for me to start small on the short side in some of these. I also pointed out a possible pair trade, long wheat, short soybeans, that worked. It was up around 0.5x on the week. I want to kick it off with a summary of a Financial Times article that highlighted Michael Platt's Blue Crest being up almost 30% year to date. And a lot of that supposedly came from his short US dollar thesis that he continues to press as long as the article is accurate. He's one of the best, clearly. I think it's important to know where some of these guys lean. Next, on the same topic, I saw a headline midweek from Citadel. They were probably at some conference. And the quote was, Citadel's Esposito says U.S. debt and deficits are a ticking time bomb. Here are 3 similar articles that I found that rhymed. The Debt Bomb Threat from Time Magazine. The Ticking Debt Bomb, Why the U.S. International Financial Position is Not Sustainable, from the Economic Policy Institute. And lastly, quote, Why the National Debt is a Ticking Time Bomb, from the Heritage Foundation. Those 3 headlines were from 1983, 1999, and 2009, respectively. Chew on that for a minute. The thesis that foreign pension funds and central banks are using rallies, supposedly in the U.S. dollar, to add to hedges on these already massive U.S. holdings is a totally reasonable, plausible thesis. But you guys know I try not to have a view. I just think it's too hard to know what's priced in, which is why I rely on positioning data, because it's just more pure. Now let's get into where the street is offsides today. We continue to have short positioning in the NASDAQ, FIVEs, soybean meal, and now softs as a group is very close to offside short. On the offside short exits, we have crude oil, and on the offsides long side, we have the euro, Mexican peso, and as I mentioned earlier, the developed market FX as a group is almost there, and we'll have more on that below. Offsides long exits include twos, Swiss franc, Brazilian real, and soybeans. So open the deck and let's hit the highlighted market section. I think it's always important to have a quick look into the equities to begin. And as you can see, I mentioned earlier that the NASDAQ is still in offside short territory. And to the right of that is the emerging markets index, which is now approaching offsides long, which I think is pretty interesting. Possible setup there. The next charts below are twos and the long bond. And I wanted to point out this whipsaw from massive buying the previous week to massive selling this past week. The next section I'm going to call the Dixie section. And I want to get into some further work that I've done on the Dixie index. We all know how it's weighted. You can see that the euro, the Japanese yen, and the Canadian dollar are either in or near offsides long territory. And as a supplement to this, I created a Dixie-weighted developed market FX index. I think it's really the best way to determine offsides positioning in the dollar because the Dixie contract itself, the notional that trades there pales in comparison to at least these 4 as a total. So I think I'm going to start to use this going forward. And you can see that we're almost there on the offsides long as a group with the percentile roughly in the mid-80s right now. The last currency chart that I want to show you is the Mexican peso, which has finally entered offsides long positioning. If you scroll down, I wanted to show you a chart of the silver oscillator, which is now in the upper quartile. The metals as a group, excluding gold, had a huge week, up almost 3x. And gold was the outlier, roughly flat on the week. But I can't show you a chart of silver without showing you a chart of gold. Next, we have the chart of crude oil that I mentioned has exited offside short, but remains in the lower quartile. And given the bearish consensus and the strong action relative to the negative headlines, maybe this has some more room to go. I highlighted last week that coffee was in the offside short position, and at one point it was up over 2x or almost 10% on the week, but it had a really ugly reversal on Friday. This is a chart of sugar that I think rhymes a lot with last week's coffee setup and is now in the offside short territory. I'll say exactly what I said last week regarding coffee, and that sugar should be front and center on your screen. If you're good at picking up on reversals, you should know where positioning is here. Next section, zeros and ones. If you guys want any of that data, just reach out to me. Lastly is the OPI, or the Offsides Positioning Index, that I include each week, and it has my risk on, risk off indicator. The OPI had another strong week. It was up roughly 1%, while the SocGen Trend Index was roughly flat again. I think the most interesting observation here is that the risk on indicator got us long in April, around 5,400, but it's slowly started to back off the last couple weeks, and now it's only at 30% net long. I tend to pay more attention when this metric is outside of the plus or minus 50% signal, So I guess we could call it continuing to trend towards neutral. Lastly, you can see that the US dollar indicator is screaming at us net long at 129%. Thank you for coming to Offsides Macro. The views expressed are my own and do not represent the views of any employer or affiliated institution. Nothing discussed should be considered financial advice. This content is for informational, educational, and entertainment purposes only.